Happy New Year, Alex Peters. It's 2022. How are you?
I'm doing great, James. Happy New Year. Thanks for having me. How's everything on your end?
Things are good. Excited about a new year, especially with the last 2 years that we have had. Every year now, we are confident that things are going to get better. So let's kick off with interest rates. Tell us the news.
So I think obviously every time we have this conversation, the prior month I've said something like, rates are probably on the way up. Fed's doing this, Fed's doing that. And then when we have our little meeting, it's like, oh yeah, they did move up, but not very much, or they didn't move up at all. I get to say this time I was right. Rates have moved up. Rates have moved up maybe 0.5% just in the last
Wow.
30 days.
I heard the
So like
news
last month,
and the stock market's taken a massive hit. Bitcoin's taken a massive hit. So what does that mean? What are the loan rates now compared to a month ago then?
yeah, so last month, conventional will probably be around 3.25, maybe 3.125, maybe 3.1 to 3.3, just right around there. Conventional loan right now, 3.75. Some people are at 4%.
Wow.
With FHA and VA, we talked about 2.75 to 3.0 a lot. We'd be lucky to get 3.3, 3.2 right now. It's probably closer to 3.5%. So this whole talk about rates are going to go up, rates are going to go up, rates are going to go up has started to come true. What's a little scary, just from my perspective, is how quickly it's happening. And I do have a feeling it's going to not continue in this fashion. I don't think if we meet a month from now, I'm not going to say, oh, now there's 4.5, and another month and now there's 5%. I think this is kind of the biggest bulk of it, and we might be riding this kind of number now for a good amount of time. A lot of it has to do with the fact that the Fed has tapered their spending. They're spending, billions of dollars, hundreds of billions of dollars a month buying bonds, and they're not spending anywhere near as much anymore. And they're tapering, meaning it's getting less and less and less and less and less to the point where they don't want to be spending any. And if you think about it logically, if inflation is between 5 and 7%, and you buy a bond and you're getting 1.5% return, it doesn't make any sense. You buy a 30-year bond and money's getting more expensive at a rate of 5 and 6 and 7%, and your return's 1.5. Doesn't make sense. So rates do need to go up for that to happen. And I think the short-term impact it's interesting. People are like, oh, short-term impact, the market's going to die. No, it's not true, actually. A lot of the time when that happens is we see a lot of people get off the fence. A lot of buyers are like, okay, now it's happening. We need to do it before it gets any worse. And so I've personally seen a little uptick in my personal business. I'm not going to speak for everyone else out there. And I can see it happening for like the next 30 to 40 days because don't know what's going to happen past that. But overall, I do think it could be healthy for the market. It's going to, unfortunately, price some buyers out of their specific price category, leaving less available buyers for that price category, which then we could start to see house prices maybe not increase as much, but start to steady off. I don't like to say they're going to decline. And the biggest reason is because just supply and demand. If you look at economics, if there's no supply and you still have a good demand of buyers, prices are going to increase anyways. But what it could do is slow things down for a little bit, allow for homes to sit for a little longer, which then increases the number of listings available. But I do think that's going to take time. I don't think it's going to happen overnight. I think it could take 6 months, maybe even a year before we see that. Just depends on how quickly the rates go up. That's my 2 cents, and I do base my opinions off of other experts.
Yeah, I mean, one of the things that I've always said is why house prices aren't necessarily going to just drop. We never know, but is the fact that everyone is refinanced at, say, 3% as an example. And what's happened is they've refinanced at a really low rate. They're not probably going to sell the house. A lot of people, especially in Southern California, are very financially secure. And what they'll do is they will probably, if they need to get a bigger house, they'll go, well, why don't we just keep our house and rent it out because we can get a really good return on the rental. So I think there's going to be a lot of that. So I think what's going to happen a lot of the time is people aren't going to sell their home. They're going to keep it. So it's going to be interesting to see if that's correct, which then means inventory is going to be low as it is now. And even if interest rates continue to rise, the pool of buyers compared to the amount of homes on the market is still going to be at a level where house prices won't drop. So, but I think in regards to the market, interest rates rising, I actually think is a good thing. As we've discussed before, I mean, hopefully that now means that it'd be nice for someone to not have to go and see a home and be the first one to write an offer. It would be nice if homes did sit on the market for a few weeks. It'd be nice if you had a choice whether you want to buy that house or another house, and not have to just buy a house because you've got no choice because there's nothing on the market. So hopefully this has a positive impact, and it'll be interesting to see if they do rise again, or if they dip and rise for a bit. And obviously we have no idea.
We just try to bring the information that we're passed down and in a format that you can digest and understand it. But we really actually don't know. As you probably, if you've been following us, you probably gathered that by now. We just do our best.
No. We said interest rates will rise. It might be a year later, but they will. And I think they will, in the long run, probably be over 4%, more than likely. I think in the next 2 to 3 years, they will be over 4%.
Oh, I think we're closer than that. I think by the end of this year, it'd be normal to be talking about, can you get me under 4, because everyone's quoting 4.25 type thing. My 2 cents anyways. I hope I'm wrong. For anyone listening out there, I really do hope I'm wrong. I hope we have low 3% for a long time for the sake of your money, but for the overall health of a market, especially when we're trying to combat inflation, just understand macroeconomics. It is a good thing, because that's one of the biggest ways to combat inflation. And if we care about our neighbors and our brothers and sisters as a country, like it's actually a good thing in the long run. So my 2 cents anyways.
Awesome. Well, anything else you want to talk about? Any other programs? I mean, one of the things that I'd like to just give you a shout out is you helped get through a loan for us. Well, it's going to close today, and bank statement loan, did an absolutely amazing job of it, closed it in a really short period. You even said that you probably shouldn't have said you could close it. You had to work your ass off to get it closed. But yeah, it's one of those that you're great with all sorts of random different loans. So just quickly go through how different people that you can help.
Yeah, so I'm not just here to help your paper top tier clientele with 20+% down. What James just said is, as a client who very savvy, very smart with her business, she writes off a lot of her income to avoid paying really high taxes in a very legitimate way, but it gave her a kind of a difficult time qualifying for a conventional loan. So we had options for her, either a 12-month or a 24-month bank statement loan. She could have even bought the property as an investment with no income, just as long as the property rents for more than what she had to pay monthly for it. So we have all kinds of programs. So if you're an investor out there and maybe income is tight because you write off your money, your income, and your CPA is really good, we have programs if you've got some good down payment where you don't even need any income, as long as the property yields a good amount of income for you. If you're an older client out there and you're considering your retirement, about like reverse mortgages, your house is starting to pay you back, we have those options too. Veterans, I love doing my VA loans. We have some of the best rates in the industry for that. First-time homebuyer programs are back at full force, getting big old grants and down payment assistance type stuff. So the possibilities are really wide and large right now for buyers that may not be the cookie cutter 20% down with an 800 FICO score. And I'm the guy to help you with that. If there's something I can't do for some reason, first of all, I highly doubt there's other people that can, unless it's like a hard money situation, but I'll connect you with those type of people. All the time I get people calling me saying, I want to do a flip. I need some money for rehabilitation. Can you help me? Personally, no, I can't, but I've got the number for 5 people that can. So just reach out. If there's something I can't do, I'll put you in really good hands. There's also a lot of people right now asking for second lines or second loans against their house to access equity. They call them home equity line of credits, or HELOCs. You've probably heard the term. We're knocking those out the park right now. I'm actually helping one of James's friends do that, and giving them a solution that other people couldn't.
Perfect. Really appreciate your time, Alex. Look forward to chatting to you in February.
Cheers. Thanks, James. Talk to you soon. You too.